Bismillahirrahmanirrahim. This is the second video on activity-based costing. In this video, we will solve an exercise on how to assign overhead using traditional costing and activity-based costing. We will explain how to compute overhead rates and assign overhead using activity-based costing. We will also explain how to assign overhead using traditional costing and activity-based costing, compute unit cost, and classify activities as value or non-value added, and finally explain how to assign overhead to products using activity-based costing and evaluate decision. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below, and for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video help students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video help fresh graduates who want to refresh their learning on activity-based costing. So let us start with solving an exercise on how to assign overhead using traditional costing and activity-based costing. Wilkins Incorporation has two types of handbags, standard and custom. The controller has decided to use a plant-wide overhead rate based on direct labor cost. The president has heard of activity-based costing and wants to see how the results would differ if this system were used. Two activity cost pools were developed, machining and machine setup. Presented below is information related to the company's operations. We have direct labor cost, machine hours and setup hours. Total estimated overhead costs are 270,000. Overhead cost allocated to the machining activity cost pool is 170,000 and 100,000 is allocated to the machine setup activity cost pool. We are required to compute the overhead rate using the traditional plant-wide approach. So for this we are going to determine the overhead rate, and this is equal to the estimated overhead, that is 270,000 divided by the direct labor cost, and direct labor cost is 50,000 plus 100,000, that is 150,000, and this will be equal to 180% of direct labor cost. Next, we are going to determine the estimated overhead, and for machining, we have the cost driver machine hours. For machine setup, we have the cost driver as setup hours, and the estimated overhead that has been allocated is 170,000, and for the machine setup, it is 100,000. So obviously this equals to 270,000. Next, we are going to determine the activity-based overhead rates, and we have already seen in the question that there are two activities, machining and machine setup. For machining, we have the overhead cost allocated equal to 170,000, and the machine hours are 1,000 plus 1,000, that is equal to 2,000, and this is equal to 85 per machine hour. Regarding the machine setup, we have the total cost as 100,000, and the machine setup hours are 100 plus 400, that makes 500, and this is equal to 200 per setup hour. Now if you follow the traditional costing, we are going to use the direct labor cost, and the direct labor cost is 50,000 for standard and 100,000 for the custom bag. So we have the 50,000 and 100,000, and we are going to apply the direct labor cost, that was 180%. So times 180%. So this will be equal to 90,000 and 180,000, and the total you can see will be 90 plus 180, and if you summed up the two, this is equal to 270. That is what we have the estimated overhead cost according to the traditional costing method. Next, we are going to compute the overhead rate using the activity based costing approach. So for this we are going to use the machine hours, and that is 1000 for both standard and custom. So we have 1000 in either case, and the rate we have already calculated as 85 per machine hour. So times 85 and 85, this is for the standard and custom, that is this will be equal to 85,000 for machining for standard and 85,000 for custom. And then we are going to determine the activity based costing for machine setup. So for machine setup, we have the setup equal to 100 plus 4 and 400. So we have 100 and 400, and the per setup hour was 200. So times 200, so this will be equal to 20,000 and 80,000, and if we, this is equal to 105,000 as overhead for standard according to activity based costing, and this will be 165,000 for custom. And you can see the difference in making our decision by traditional method and the and the activity based costing. You can see that there is a substantial difference between the allocation of overhead cost, and this will definitely impact our decision regarding pricing. Next, let us start with solving one more exercise on how to assign overhead using traditional costing and ABC activity based costing. Altec Incorporation manufactures two products, and wheels, car wheels and truck wheels. To determine the amount of overhead to assign to each product line, the controller has developed the following information. For cars, the estimated wheels they are producing is 40,000, trucks they are producing 10,000, and the direct labor per wheel for car is 1, and for truck it is 3, and the total estimated overhead cost is 770,000. So first we have to compute the overhead cost assigned to the car wheels and truck wheels, assuming that direct labor hour is used to allocate overhead cost. So the overhead cost for cars, we have the total number of wheels produced is 40,000 and labor hour is 1. So 40,000 times 1 will be 40,000, For trucks, it will be 10,000 times 3, that will be equal to 30,000. So the total direct labor hours is 70,000. Next, we are going to calculate the per direct labor hour, and we have the total estimated overhead cost as 770,000, and the total direct labor hour is 70,000, and this is equal to 11 per direct labor hour. Next, we are going to assign the overhead for car wheels and the truck wheels. For the cars, it is 40,000. The wheels produced times the 11, the per direct labor hour, that will be equal to 40,000 times 11, that is 440,000. And for trucks, it will be 30,000 times 11, that is 330,000, that is equal to 770,000. Next, we are going to determine the ABC overhead. So this is we have done part A. And then so we are going to look into how we are going to allocate this for ABC as per ABC overhead. So for this, we have the expected use of cost drivers as 220,000, 280,000, and 270,000. And the setup estimated overheads are 1,000 setups, 70,000 labor hours, and 1,200 inspections. So the ABC overhead rate will be 220, that is 220 divided by 1,000, 280 divided by 70,000, and 270 divided by 1,200. This will equal to 220 for dollars or reals per setup, 4 per labor hours, and 225 per inspection. We will continue with this exercise on the next slide. And now we determine the cost assigned to car wheels. And again, we have the same activity cost pool: setting up machines, assembling, and inspection. And for car wheels, the expected use of cost drivers are 200, 40,000, and 100. And we have already determined the rate as 220, 4, and 225. So we will multiply. The rates are 220, 4, and 225, and the total cost assigned for car wheels for setting up machine will be, we will simply multiply them, and this will be equal to 44,000, 160,000, and 22,500. So the total cost that we are going to assign for car wheels is 226,500. Regarding the truck wheels, we are going to have the expected use of cost drivers as 800, 30,000, and 1,100. And the rates are the same as we have done before: 224 and 225. So we have 224 and 225, and this is equal, once again we will multiply, and this will be equal to 176,000, 120,000, 247,500, and the total will be 543,500. So this completes part C. We have computed the cost that is assigned to the car wheels and truck wheels. using the activity based costing system. And now let us solve an exercise on how to compute overhead rates and assign overhead using activity based costing. Now, Major Instrument Incorporation manufactures two products, missile range instruments and space pressure gauges. During April, 50 range instruments and 300 pressure gauges were produced and overhead cost of 94,500 were estimated. An analysis of estimated overhead cost reveals the following activities. We have the activities, we have the cost drivers, and we have the total cost. The cost driver volume for each products are here for instruments and gauges, and these are the totals. And they are asking us to determine the overhead rate for each activity. So first of all, we are going to look into the estimated overhead for material handling. Is 40,000. For machine setup, it is 27,500. For quality inspection, it is 27,000. And the expected use of cost drivers per activity is given over here, 1,000, 500 and 600. So the activity based overhead rate, we are going to divide them. This will be equal to 40, this will be 55, and this will be 45. Next, we are going to determine the cost assigned. First of all, we look for cost drivers. We have material handling, machine setup, and quality inspection, and we have the rates, and the rates are 40, 55 and 45. This is what we have calculated just now. And the numbers that is given to us is, for instruments, the number is 400, 200 and 200. So we are going to multiply the two, and this will be equal to 16,000, 11,000, 9,000, and the total cost will be the summation of these three, that is 36,000. Now the units produced for the instruments they have produced are 50. So we have 50 over here, and the overhead cost per unit will be now 36,000 divided by 50, that is 720. Regarding the gauges, we have the numbers for gauges 600, 300 and 400, and the cost, again we will simply multiply by 40, 55 and 45. So once we multiply, this will be equal to 24,000, 16,500 and 18,000, and the total will be 58,500. And the total cost assigned will be the total of the cost of instruments and the cost of gauges. 16,000 plus 24,000 is 40,000. 11 plus 165, 500 is 27, 500. 900 plus 18,000 is 27,000, and the total will be 94,500. Now the units produced in the case of gauges is 300. So we have units produced for gauges 300, and the overhead cost per unit will be 585 divided by 300, that is 195. Okay, so this is what we were supposed to do. We have to determine the overhead rate. So this was the overhead rate that we have calculated, and then we have assigned the manufacturing cost and for the instruments and gauges. Next, let us see how to assign overhead using traditional costing and activity based costing. We will compute unit cost, classify activities as value or non-value added. Okay. Now, Fire Out Incorporation manufactures steel cylinders and nozzles for two models of fire extinguishers, a home fire extinguisher and a commercial fire extinguisher. The home model is a high volume 54,000 units half gallon cylinder that holds 2.5 pounds of multi purpose dry chemical at 480 psi. The commercial model is a low volume 10,200 units 2-gallon cylinders that holds 10 pounds of multi-purpose dry chemical at 390 psi. Both products require 1.5 hours of direct labor for completion. Therefore, total annual direct labor hours is 96,300, that is 1.5 times 54,000 plus 10,200. Then expected annual manufacturing overhead is 1,557,480. Thus, the predetermined overhead rate will be 16.17, that is 157,480 divided by 96,300, that gives us 16.17 per direct labor hour. The direct material cost per unit is 18.5 for the home model and 26.5 for the commercial model. The direct labor cost is 19 per unit for both the home and the commercial models. The company's managers identified 6 activity cost pools and related cost drivers and accumulated overhead by cost pools as follows. So we have 1, 2, 3, 4, 5, 6 activity cost pools, and there are 6 cost drivers, and that is how they have allocated for estimated overheads are there for each activity, and you can see this is equal to 1,557,480. Then the expected use of cost drivers is 335,000 for this is given for each of the activity cost pools, and expected use of cost drivers by product is 215 and 120. So if you add up the 215 plus 215 plus 120, that gives 335. So obviously this is the expected use of cost drivers is split between the two products, as you can see, and they are equal to the expected use of cost drivers. Now, what we are required is under traditional product costing, compute the total unit cost of each product. So to compute the total unit cost of each product, we have the direct material, direct labor, and the overhead. We have the 3 components, and the direct material is given at the rate of 18.5 for the home model, and for the commercial we have 26.5. Regarding the direct labor, it is the same. It is given in the question. The direct labor cost is 19 per unit for both. So we have 19 in both the cases. And then we look into the overhead, and the overhead is what? The overheads are going to be 1.5 hours. This is for direct labor for completion, and this will be multiplied by the overhead rate, that is 16.7. So 1.5 times 16.7, this will be 24.26, and this will be 24.26. So the total unit cost, we are going to add up the three, and this will be 61.76 and 69.76. So this is part A that we have done. Next, they say prepare a simple comparative schedule of the individual cost by product. Now so that is what we have done by product. Under ABC, prepare a schedule showing the computation of the activity based overhead rates per cost driver. Now you can see that we have the estimated overheads. We have the estimated overheads, and that is what we have put over here. And the expected use of drivers by product are given over here, and that the same numbers are here as well. And now we have to calculate the activity based overhead rate. So we are going to divide, and this will be equal to 0.21, 4.30, 1.90, this will be 2, this will be 10, and 2.45. We will continue with this exercise on the next slide. So we have computed the activity based overhead rate per cost driver. You can see this is how we get the numbers, and we continue on the next slide. And here they say prepare a schedule assigning each activity's overhead cost pool to each product based on the use of cost drivers. Okay, include a computation of overhead cost per unit rounding to the nearest cent. Okay, so we have the, first of all, we have the home model and we have the commercial model, and the expected use of cost drivers for the home models are 215,000, 27,000 for forming, for 165,000, then 15,500 and 3,680, and the total obviously is 215,000, 15,000. Okay, now the rates we have already calculated before: 0.21, 4.3, 1.9, 2, 10, and 2.45. So we have 0.21, 4.30, 1.90, 2, 10, 2.45. And now we are going to multiply the two numbers, and this will be equal to 45,150, 116,100, 313,500, 31,000, 36,800, 526,750, and now the total cost assigned will be the total of these values, that is 1,069,300. We already know that the units produced are 54,000 for the home model. So the units produced are 54,000, and this will be divided by the we are going to divide the total cost assigned by the units produced, that is 54,000, and we get 19.80. Now we come now to the commercial model. For the commercial model, the expected use of drivers by product is 120,000, 8,000, 52,000, 10,000, 1,528, and the total is given as 120,000. Then we apply the same overhead rate, that is 0.21, 4.30, 1.90, 2, 10, and 2.45, and this one again we multiply, and this will be equal to 25,200, 34,400, 98,800, 20,000, 15,780, 294,000, and the total cost assigned will be the total of all these values, that is equal to 488,180. Now the units produced, that is for the commercial model, the units produced is 10,200. So we divide this by 10, so the units produced is 10,200, and the overhead cost per unit will be 488,180 divided by 10,200, and this will be equal to 47.86. So this completes our part C, and we move on to part D. Now for part D, they say compute the total cost per unit for each product under activity based costing. Okay. Now we have already calculated for the direct material for ABC is going to be 18.5 for the home model and 26.5 for the commercial model. Then the direct labor is, we have already calculated before, and it is given in the question rather, that is 19 per unit for both. So we have 19 per unit for both. And finally we have the overhead, and the overhead is 19.8, and this will be 47.86. So we have 19.8 and 47.86, and when we make the total of the two, this will be 57.3 and this will be 93.36. Next we are going to, so this is part D, and now we go to the last part, that is part E. Classify each of the activities as a value added activity or a non-value added activity. Now receiving is obviously a non-value added. Forming, yes, you can see the forming is value added. Assembling is value added again. Testing is non-value added. Then we have painting, we have value added, and finally we have packaging and shipping, that is also value added. Next, let us solve another exercise, and now we have here Schultz Electronics manufactures two large screens television models, the Royal, which sells for 1600, and a new model Majestic which sells for 1300. The production cost computed per unit under traditional costing for each model is given over here. We have for the Royal and the Majestic. Then in 2014, Schultz manufactured 25,000 units of the Royal and 10,000 units of Majestic. The overhead rates are 38 per direct labor was determined by dividing the total expected manufacturing overhead of 7,600,000 by the total direct labor hours, that is 200,000 for the two modules. Under traditional costing, the gross profit on the gross profit on the models was Royal 552, that is 1600 minus 1048, and Majestic is 590, 1300 minus 710. Because of this difference, management is considering phasing out the Royal and increase the production of Majestic model. Before finalizing its decision, management asked Schultz controller to prepare an analysis using activity-based costing. The controller accumulates the following information about overhead for the year ended December 31, 2014. So we have the activities, cost drivers, estimated overhead and all. And now, first of all, they ask us to assign the total 2014 manufacturing overhead cost to the two products using activity based costing and determine the overhead cost per unit. Okay. So first of all, we are going to have we have the overhead rate for the purchase. We have the overhead rates are given over here: 30, 50, 40 and 25. So these are the four rates that are given in the question, and then we are going to use the drivers for Royal. For Royal, the cost drivers are purchase order 17,000, machine setup 5,000, machine hours 75,000, and inspection is 11,000. So we multiply the two and we will get the cost assigned as equal to 510,000, 250,000, 3 million, and finally 275,000. And the total cost assigned will be 4,035,000. Now the units produced in the for the Royal, they have produced 25,000 units. So the cost per unit will be 4,035,000 divided by 25,000. That will give us 161.40. Regarding the Majestic, the cost drivers values are given to us, and I will change the color. The cost driver are for the Majestic is 23, 13, 45 and 17. 23,000, 13,000, 45,000 and 17,000, and the cost assigned we have is again we will be multiplying them by the rate. 30 times 23,000 is 690,000. 50 times 13,000 is 650,000. Then we have 40 times 45, that is 1,800,000. And then finally we have 25 times 17,000, that is 425,000. So the total cost assigned for Majestic will be 3,565,000, and they have produced 10,000 units of Majestic. So the units produced are 10,000, and the cost per unit will be 3,056,000 divided by 3,056,000 divided by 10,000, that is 356.50. And now we are going to add up the two, and when we add up, we are going to add up the cost of Royal and the cost of Majestic, that is 510,000 plus 690,000, that is 1,200,000. 250 plus 650, that is 900,000. 3 million plus 1,800,000, that is 4,800,000. 275 plus 425, that is equal to 700,000, and the total will be 7,600,000. So this is how we have completed part A of this exercise, and we will continue with this on the next slide. And now they say what was the cost per unit and gross profit of each module using activity based costing. So first of all, we are going to determine for Royal. The direct material for Royal is 700 and the direct labor is 120, and the manufacturing overhead for Royal is 161.40. For Majestic, the direct material is 420 and the direct labor is 100, and the manufacturing overhead is 356.5. 356.5. So the total cost per unit for Royal will be 981.40, and for Majestic it will be 876.50. Next, and then we are going to determine the gross profit for Royal and Majestic. Now we have the selling price, and the selling price is given for Royal as 1600 and for Majestic it is 1300. So we have the selling price of 1600 and 1300. Then we have the cost per unit that we have just now calculated, 981.40 and 876.50. So the gross profit is 618.6 and 423.50. Then let us go to the last part, and they say, are management future plans for the two modules sound? Because you see what they are planning is management is considering phasing out Royal model and increase the production of Majestic. Now you can see that if you go for the two modules, I think they are not having a sound decision in this case, and the reason is that the Royal is generating a gross profit of 618 against 623 by Majestic. That means Royal is making an additional gross profit of how much? 195.10 per unit. That is, they are making 195.10 of per unit profit more than the Majestic. So if at all they plan to phase out the model, it should not be Royal, they should be phasing out the Majestic if we look into these figures. But then this is the how the activity based costing helps us in making a decision. So rather we phase out Royal model, we should phase out the Majestic model if we go with these numbers. So with this, we complete our discussion on activity based costing. We have done some exercises, and I hope that these exercises will help you to have a better understanding of activity based costing. If you have any question regarding this session, then please put them in the comment section below or send me an email, and inshallah I will reply you back. Thank you so much and happy learning.